Welcome to the CCN podcast, where we discuss the latest trends, companies, and people shaping the cryptocurrency space. I'm your host, Jake Sylvester. Hey, what's up, guys? Welcome to the 17th episode of the CCN podcast. First of all, I'd like to apologize for getting this out late. I'm in Portland at TruffleCon. We're getting some really good interviews in, and I think you guys are going to really enjoy the content coming out of here. It really goes to show what goes into development in a modern project and some of the real-world use cases for projects like Ethereum that are in production today. Also, a couple announcements. The Caitlin Long interview went up this week. I highly recommend that you check that out. We also had an article called Rehypothecation, Inside the Wall Street Practice That Could Ruin Bitcoin. One of the things that happened when I was interviewing Caitlin Long is I just kept asking, how did the system get this way? How did we get all these layers of complexity and things that could be abused by the financial system? The regulators aren't stupid, and the bankers aren't either. So what I did is I went all the way back to the beginnings of the New York Stock Exchange, and I examined the roots of rehypothecation. The big takeaway for me is that the current system was not designed to be malicious. It's hundreds of layers of complexity that have been added, and when you holistically look at it, it doesn't make sense, but every individual decision that went into making the system makes sense. So this is part one of a two-part article. I highly recommend you check it out, and definitely let me know your thoughts on it. Also, I was on a panel at Global Blockchain Forum in San Francisco on Friday on the future of media. That should be released in a week or two, and I'm going to recommend you guys check that out. So let's move on to today's discussion topics. EOS has taken an interesting vow. Malta's prime minister is speaking at the United Nations, and Coinbase has achieved an $8 billion valuation. So let's start with the prices. It was pretty much flat this week. It's funny, actually. I was writing my This Week in Crypto, and there really was not a lot to talk about. There's a lot of good news coming out of crypto. There's not a lot of bad news in the way of regulation. It's just that the prices really aren't moving. Now, right now, the bulls are really praying for a $7,000 mark to start gaining some momentum again, but the volume is just not there to support it yet. Some have theorized that this could be accounted for by ETHSF week and a lot of traders being away from their desks. I don't really buy this, but I guess only time will tell next week. The other thing that might happen after this week is we're going to have a lot of partnerships being developed at ETHSF and a lot of people getting together and announcing things. And this could have a very positive effect on the market next week. Once again, though, only time will tell. Next up, Coinbase is in talks to secure $500 million in funding at an $8 billion valuation. This is a huge increase from Coinbase's current valuation of $1.5 billion. And more importantly, this could mark a liquidity event for some investors and employees that have been there forever, because the fund, Tiger Global, is looking to use half those funds to buy out investors. Now, another interesting thing about this deal is a lot of the time, if you're raising this much money, you're going to use it for a lot of growth. Now, the fact that Tiger Global is using half of its funds to buy out previous investors suggests that Coinbase might just not need the money at this point. Next up, TD Ameritrade announced a strategic investment in ErisX, which offers Bitcoin spot trading and other financial services around cryptocurrencies. This is a strategic shift for TD Ameritrade, and they're hedging their bets against traditional financial markets and moving away from securities and into cryptocurrencies. This is not a product offering by TD Ameritrade, but this is a big step toward someone at that company looking at cryptocurrencies and saying, okay, maybe we need to start developing a product line here. Another whale coming into the space is Yale, which has a $29.4 billion endowment. This is an endowment so big that the joke about Yale and Harvard and some of these other Ivy League colleges is that they're hedge funds with small colleges attached. This week, they invested in cryptocurrencies, and this marks a major strategic shift from a traditionally conservative endowment fund. Endowment funds have been under pressure to increase earnings, with funds like Harvard losing billions of dollars over the course of several years. Next up this week, Block.one has vowed to use its EOS tokens to prevent voting cartels. Now, Block.one is the parent company of EOS, and when it released the first version of its EOS IO software, it raised $4 billion, and it also received 100 million of the billion tokens that were distributed through the network's Genesis block. Now the blockchain startup is vowing to use those tokens to stave off any block-producing voting cartels, which they say there are rumors of arising now and potentially compromising the EOS chain. Next up, at the UN General Assembly, Malta Prime Minister Muscat emphasized that recognizing the potential blockchain, Malta has openly embraced the crypto market and the businesses within it. They're actually considered a leader in the global cryptocurrency sector now because of their favorable regulations and their policies. One of the interesting things about Malta is they've actually received public endorsements and investments from the likes of Binance CEO Changpeng Zhao. This is a big deal for such a small country, and if Malta succeeds at really growing its blockchain company base, it could be a huge deal for the tiny country. Last up this week, we have an interview with Orbs. I hope you guys enjoy it. Hey, what's up, everybody? I'm here with Daniel Pellet, the co-founder of Orbs, and Danny Brown, the head of partnerships. How you guys doing today?
We're doing great. Thank you for having us.
Yeah, it's awesome to have you on. So talk a little bit about what the problem is that Orbs solves.
Sure. So it's quite funny the way we started Orbs wasn't by thinking right away this is what we need to do. There was a little bit of background how we reached that point. Initially, we started in investing in 2013, and we've been doing that for the last few years. In 2017, when the whole ecosystem exploded and a lot of fundraising and so on happened, we really realized that a lot of the projects don't have real fundamental value behind them. And since we were investing a lot, we started changing our investment thesis. And instead of investing in projects with white paper, we wanted to invest in real companies that have a real track record, the ecosystem, validation. And we started the whole concept of reverse ICOs. And this is how Hexalabs came to be, which is our accelerators. We take real companies and we help them transition into the blockchain. And we help companies raise hundreds of millions of dollars on top of the Ethereum platform. And then the next step was that when these companies try to transition their ecosystem into the blockchain space, they will really hit with a lot of difficulties as scalabilities and other issues that real applications are facing when they're today building on top of Ethereum. And this is where we started Orbs. So Orbs is an infrastructure project that aims to scale first layer protocols such as Ethereum, solving issues such as scalability, but also other production problems such as, for example, transaction fees that can scale to many transactions, or KYC, AML, and things that are needed, to work in the real world with the financial systems. How do you do updates? How do you do upgrades on a production environment? These are things that applications working on AWS have solutions, but in the decentralized space, everything is very, very immature.
So, Jake, I think there's when people in the space are talking about the scalability issues, there's a misguided focus on TPS, and then all these new projects that you're hearing about. Oh, we have infinite TPS, so we're working towards 500,000 transactions per second, and we're looking at scalability at Orbs in a more comprehensive way. We're looking at a comprehensive scalability standards that, as Daniel mentioned, also includes having proper fee structures for apps. Because right now on Ethereum, if you think about it, then the user pays the transaction fees. Now that works for, let's say, when you're participating in a crowd sale, or you're purchasing like a big transaction, you don't mind paying $1 transaction fee, right? But when you're talking about microtransactions of real companies with real users, let's say a mobile app selling stickers, right? A 16-year-old girl buying a sticker will not pay $1 for the transaction fee for that $1 sticker. So that's part of the bigger scalability problems that we're solving.
So I think one of the interesting things about you guys is the idea of a fixed fee structure, right? So with CryptoKitties, you had the Ethereum network getting congested to the point where what used to cost $1 costs $100 now. Talk a little bit about how you approach that and the benefits that could have for the Ethereum ecosystem.
So regarding fees, I think many of the structures today, if you think about it, have a fundamental issue because there is a misalignment between the different participants in the ecosystems of the different infrastructures. If you think about, for example, the two leading consensus mechanisms, proof of work, the political ownership is in the hands of the miners, or proof of stake or delegated proof of stake, the political ownership is in the hands of the early investors or the early adopters. And both of them are misaligned with the end users, with the end customers, which is the large consumer application or the dApps developers, that they would like to have a minimum fee as possible so they will be able to scale their ecosystem. The way we look at it is that we would like to decrease the fees to the minimal amount possible in order to enable maximum benefit to the application there. This is also one of the reasons in our consensus mechanism, the applications themselves are the nodes in the network that are in charge of the validation. So obviously they are aligned with their own interests. So the way we look at fees is that the bare cost possible, if you think about it, who has today the fee for infrastructure cost, essentially. The closest, I think, projection is AWS itself that rents storage space and CPU power. So obviously Orbs is going to be more expensive because the decentralization and the redundancy and the security is, multiple validators. It will always be more expensive than a single state, but it will be without any additional fees that will go into parties such as miners or early investors such as proof of work or proof of stake. It will be the minimal because it serves the applications themselves, so they have an interest to have it in the minimal fee possible. I also think that, if you try to increase the fees in a way that is not beneficial to the applications there, what they will do, and we see that already happening, they will actually fork the network, such as the case of Kik forking Stellar in order to reduce the fees in the system. In the end of the day, the technology that we're all developing is open source. We're developing a financial system. So if there is misalignment, and the incentives of the applications, and some of them are obviously very large with millions of users, is really to do the best things in their interest. So by reducing it to the minimal, there's no actual incentive to fork Orbs.
You actually brought up an interesting point with Kik there. Can you talk about a little what you did with Kinit and how that ended up working?
Yeah, sure. So it was very important for us to have real production scale companies working with us from day one. So we will really be able to design Orbs to be very requirement driven. I think one of the things that we're seeing in the ecosystem is that a lot of different projects are developing very interesting tech, super innovative research, but in the end of the day, the usage is still very low. If you look at the CryptoKitties, they have about 100 daily users. If you look at Augur, I think they also have about less than 100. I just read an article that the biggest dApps on top of Ethereum and EOS have just a few hundreds of daily users. And one of the reasons is that it's not just enough the tech and the research is really working closely with large consumer application to understand what are their pain points and what are their requirements. Because when you design an infrastructure, there's a lot of trade-off that you need to deal with. There's not going to be one blockchain to rule them all, in our opinion. It's trade-offs between decentralization and security and speed, for example, between compliance and anonymity. It really depends who you're building the infrastructure for. So by working very closely with Kik and the Kin team and co-locating in the same floor in the office in Tel Aviv, really enabled us to build in a requirement-driven way. I think Kin is one of the first big companies that transitioned 100% with all of their efforts into the blockchain space. As we know, Kik in the last round raised in $1 billion valuation. They have today 17 million monthly active users, and they really need answers and solutions today in order to transition the user base on top of blockchain infrastructure. So working closely with them, we're able to work in a much more, I think, concentrated and specific way to solve real problems. So that's what we're trying to do from day one.
And I think the work with them and the other companies that we're working with that are really, as Daniel mentioned, real companies with millions of users that are looking to integrate blockchain into their existing user base and onboard them. And one of the things specifically that helped us with the design philosophy and the architecture is the entire concept of having a customizable blockchain, which is a big differentiator for Orbs when you're looking at the landscape right now. So we realized that similar to AWS cloud service, when you think about it, when you're using it, whether you're Netflix or any other smaller app, it's customizable to anyone. They have the specific features. You choose your own bandwidth, your own size. You're not affected by traffic else in the space. And that's why when we designed Orbs, we designed it in a similar way. So it feels like a private blockchain, even though it's not.
Yeah, and I think Kik is a really interesting example. When they made their announcement, we actually did a short interview with their VP of Communications, Ron McLeod, I think. And Kinnit was really the first app that had millions of existing users that they could deploy a blockchain solution on. They're also interesting because they're in a very, very competitive space, which is messaging, and they've managed to maintain their independence for so long. So talk a little bit about some of the other opportunities you see for underdog type companies like Kik to utilize blockchain and transform their business models using Orbs.
Yeah, that's a great question. I think that, if you look at the mobile space, the whole monetization today is quite broken because if you have 1,000 users or 100,000 users or 10 million users, your ability to monetize is not linear. Essentially, only the top applications are the ones that are generating most of the revenue, mostly the top 100. And the rest of the applications today can't monetize, so they need to keep fundraising and to be venture backed. And even the ones that are successful, the way they monetize is in a way that is not very friendly to the user. Is by basically pushing advertising, which, as we know, is not very consumer friendly. So I think tokenization and the ability to program your economy in a way that really aligns the interest and incentives with the users is really a new way to reward and to create a sustainable ecosystem. If you think about Ethereum as an example, they have more maybe than 30,000 developers working on the platform. The wealth creation in the last 4 years was just incredible, from 30 cents to $1,400 at the peak in January 2018. That's 4,200x Just put it in perspective, Facebook, since their IPO in the last 6 years, did 4.5x. And all this wealth creation went to all the different participants in the ecosystem, if it's the investors, the users, the third-party developers, the service providers. So a token really is able to be a new way of how you create a sustainable ecosystem. We need to remember Ethereum is a non-profit foundation, and they haven't signed any legal agreements to the best of my knowledge. So even till today, we had a for-profit company generating a IP revenue dividends, or an open source company doing amazing things such as Wikipedia, Mozilla, Linux Foundation, but not being able to monetize it. I think tokenization is a new model for open source community-based ecosystems, but with ability to monetize and to create and share the wealth creation. So I think it's really amazing, and this is the real innovation behind blockchain, creating a digital scarcity for the first time that we have a digital asset that is scarce and valuable, and the ability to have a peer-to-peer mass collaboration on a global scale in a completely trustless way. And I think the companies that realize that and will be first movers and will be able to take the customers and the users to be more aligned with them will be able to grow much quicker than existing for-profit companies that are doing most everything just in their own interest.
Yeah, it's so interesting you mentioned Facebook there in the context of Kinit, because I think it was just yesterday, Brian Acton, who founded WhatsApp and sold it to Facebook, said, quote, "I sold my users' privacy to a larger benefit. I made a choice and a compromise, and I live with that every day." So in the context of, having talked to some of the people at the Kin team about how they want to monetize, but they don't want to really sell their users' privacy, and then comparing the returns of Ethereum to Facebook, it's really eye-opening to see just how powerful this new business model is.
Yeah, I totally agree, and I think it's really an evolution if you think about it, where the customer is in the value chain. If 10 years ago we were, basically paying for services, everything that we consumed, and then in the last few years, everything transitioned into a freemium model, which is good. We don't pay and we get great services if it's Google or Facebook or some of the other companies. Today, I think customers are expecting to be rewarded because they are essentially the most important part in the value creation. What is the value of Facebook? It's the users themselves that are driving the content, and blockchain technology really enables to reward the users and make them more active participants also on the wealth creation. So I think it's definitely amazing, and it's going to drive a lot of change. It's really the next step of the shared economy.
And I think to add to that, it's not only the economic models, they're also the technology itself, allowing this anonymity, allowing sort of the different blockchain companies that in ad tech space like MadHive are looking to have a little black box on your own device that you own your data. So there is the economic models of incentivization to share, but then on the other hand, the actual technology to allow you to keep and own your own data.
Yeah, the idea of data sovereignty is definitely an incredible concept that's really taking the world by storm in the wake of Cambridge Analytica. So can you talk a little bit about how you guys kind of got started and how your location in Israel has kind of shaped your company? Because that's pretty unique in the blockchain space.
Yeah. So as I mentioned in the beginning, we started in 2013. Initially, it was we wanted to educate ourselves on this new asset class. When you see Bitcoin rise from $100 to $1,000 in a very short time space, it's super interesting. And you want to get your hands dirty a little bit. But the more you dive into the technology and you really start to understand the potential, I think blockchain and Bitcoin is the biggest innovation, technology innovation that is happening in our generation, that is going to fundamentally change many things on monetization side, on the social side. We dived much deeper, and initially it was investing. We bought Bitcoins at the peak, and then the price crashed. If you remember, at the beginning of 2014 to almost $150, yep. $200, took almost 3 years to recover. But at that time also, it was the really beginning of token sales. It wasn't called token sales at the time, but essentially that's what project was starting to do, starting with the Mastercoin. There were a lot of people from Israel working on Mastercoin. Vitalik flew to Israel to see if he can build a second layer on top of Mastercoin, on top of Bitcoin. He realized that's not the right thing to do, and then he went to study Ethereum, and we know how that developed. But that was an interesting investment opportunities because essentially there was a lot of innovation in these new projects, if it's decentralized storage or if it's a smart contract, but also the market caps, which were much lower. Bitcoin at the time was 10 billion. In order to do 10x, a lot of value need to flow into the ecosystem. And when a token started $1 million or $10 million, to do that 10x, it's easier in a sense. So we started investing. The returns were very good over the last couple of years with the growth of the ecosystem and the growth of some of these projects. Today, we're managing one of the largest funds in Israel, investing in crypto project and in the ecosystem as a whole. In 2017, we realized that there's too many projects raising money. We're not in the venture capital space investing in equity, but if you think how hard it is for equity to choose the winners, about 1% of venture-backed companies actually succeed. Most of them fail. It's really hard to build a strong, sustainable business. We understand that in the blockchain space, it's going to be even much less than 1% because the money is easier, the governance is lower, and the technology is very immature. And this is how we started Hexalab, which is the accelerator to bring real companies to help them transition into the ecosystem that will help mature the ecosystem. It's also good investment opportunities. And then realizing the pain points of large consumer application trying to transition their ecosystem into blockchain, we started Orbs. We very much believe that there will be a very big ecosystem for security tokens, utility tokens, but because the ecosystem is so immature, the focus should still be on the infrastructure. I think in the last 8 years, Bitcoin really created the L1 in Ethereum in the last 4 years, the liquidity layer, the decentralized layer, and 2019 is going to be all about really creating the productivity layer that enables real dApps to perform in the ecosystem, and this is what we are passionate about. It's important to know that it's not enough to just focus on the research and the tech side from our perspective, because the barriers to entry are quite low. Everything we're doing is open source. So, any other company can go to our GitHub, press a button, and copy all the thousands of hours of research and development that we're putting into Orbs. And we can do the same, with Ethereum or Tezos or EOS or any of the other companies. So it's not just enough to lead on the research and the tech side. It's really about building the ecosystem around the token. And the token is really a encapsulation of the wealth creation. So our strategy is very similar to Ethereum in that sense. We have Orbs, which is the infrastructure project, and we have Hexa, which is helping drive the whole ecosystem around Orbs. And to do that, we are investing in strategic assets that will help drive projects into our ecosystem, which is exchanges, market makers, media, and OTC. So projects that we're helping accelerate We can tell them we're building an infrastructure that is designed for your requirements. We can help you with the exchanges, tradability, with the liquidity, with the OTC and the media, and that starts to create a whole ecosystem around Orbs.
Daniel, I actually had someone I was meeting with a fund here in San Francisco, and I was describing the Hexa group as a whole. They were telling me it feels like everyone in the space is just building ivory towers, and you guys are building a city. And that's how this space should look like.
So as far as Hexa goes, do you guys follow the venture development studio model that Consensus has pioneered, or are you guys structured a little bit differently?
I think we are structured in a more traditional sense. So we have different initiatives. The way we look at it is that we're not going to be the best at everything. So we should find the best people in each of the vertical that is important to our ecosystem and invest in them and let them lead that vertical. So we have a holding company investing in different projects and assets that we believe are very important. And we also have our 4 groups, which is Orbs, the technology arm, Hexa Finance, which is the investment arm, Hexa Lab, which helps accelerate the project that we invest and create synergies between them, and Hexa Foundation, which deals a lot with thought leadership, with work with the regulators, where Israeli companies, there's a lot of work regarding taxation and regarding legal aspects that are very new, and we are in active discussions with the regulator to see that things are moving in the right direction. So we're doing social project under Hexa Foundation. So I think these 4 arms, together with the portfolio companies we invest in, really creates a strong ecosystem. We are in very close discussions with Consensus. We definitely see Orbs as part of the Ethereum ecosystem. The hybrid model that we are pioneering, that Ethereum is the L1, the liquidity decentralized network that I think today is the most advanced, with the most project on top of, and Orbs with Helix consensus algorithm is able to solve really productivity issues today. That gives the best of the 2 worlds for any dApps that is looking to build and issued an ERC20 token. And the way that they work is in a much more decentralized manner. They have 1,000 people, 28 countries, doing a lot of work in different verticals. I think right now we are much more smaller, much more focused, but we do see us growing in that direction.
Yeah, so talk a little bit about where you see Orbs and Hexa as an organization ending up in 5 years. And maybe you could touch on a bit of the broader ecosystem growth too, and where both of you see that heading.
Sure. So I think what we are now seeing is obviously there was a bubble, there's a correction. I see that as a very good thing, because every time the price goes up, it brings a lot of people into the ecosystem. And what gives me the most validation that we're going to the right direction is seeing the amazing people, the smart people, dedicated people on the technology side, research side, economy side, and that are transitioning to the ecosystem. But I would compare the phase that we are at a little bit to the .com. As we remember, between 97 to 2001, a lot of companies did IPOs, raised a lot of money. Then 2001 came, the market crashed. Most of the companies disappeared. But there were some companies, that grew out to be huge successes, if it's Netflix or Amazon, and then Google and Facebook. And I think the same will happen in the blockchain ecosystem. Most of the companies that we're seeing today will disappear. They don't have real fundamental value. We can already see that on CoinMarketCap very clearly. If you look at the screenshots of the different top 50, top 100 projects year over year, they're being replaced, except for a few projects that are creating more network effect and that are growing, which is mostly the infrastructure projects. So we see Orbs as one of the companies that I think will be one of the leaders and one of the companies that will survive because we will be able to drive real usage, real transactions, real adoption of mainstream companies that we are speaking with, and some of them already publicly share that. And this is what we're excited about, to bring real usability into the ecosystem from some of the largest companies in the world. And this transition is already happening. If a couple of years ago it was just a few people in the garage writing white papers, and then the whole concept of reverse ICO started, which is established companies transitioning into the space, but not necessarily the strongest ones. Actually, a lot of companies that couldn't continue with the traditional venture capital space because they won, the biggest winners in their specific vertical. Now we see the best companies transition into this space because they see the value that tokenization and programming their economy can bring to their customers, and what advantage it can bring to them. If it's a Telegram transitioning into the ecosystem, Kakao, Line, and some other large and successful companies. So I think the infrastructure that will be able to give a solution for large consumer application for real production grade companies will become a very significant player in the ecosystem, working together with the established L1 networks that I think will continue to grow even stronger because they provide the liquidity layer today.
And I love that question in regards to Orbs, just because I get that discussion a lot, because part of our philosophy is really when we're talking to apps, we're telling them, listen, you may think you know your needs now, but what are your needs in 2 to 3 years? And when you're choosing an infrastructure, the question that you should be asking yourself is, where am I as an app? Can I even imagine where I'm going to be in 2 to 3 years? And obviously the answer is no. And that's why you need an infrastructure that has the flexibility built in that would allow you to change, expand, change your business model, adapt to new reality, and evolve.
Yeah, what Danny just mentioned is really our strategy. If you think about how Orbs is going to the market, on one vertical, we're working with some of the largest consumer applications that are transitioned into this space, and we have Hexa that helps bring these customers and build these relationships. And I think that if Orbs works for these large companies, it will definitely work for the long tail. But on the other vertical, we're also developing a compiler that essentially will enable all the existing smart contracts to run on top of Orbs from almost the going live of the network, meaning that any app developer working with Ethereum and other infrastructure project will be able to integrate the Orbs SDK and initially just mirror transactions into Orbs. But if we can, and that's great for redundancy, for security, but if over time we can prove that Orbs has a larger transaction throughput, a fee model that can scale, an update model that companies can work with, the virtual blockchain concept that gives them much more flexibility, but just pressing a button, they will be able to transition to Orbs. And I think being a winner on merit and not on lockup, this is really what CTO and CEOs are looking for when they decide regarding which infrastructure they want to use.
And just from your conversations with different people around the industry, is blockchain something you see top Fortune 100 tech companies starting to transition to? I know we've seen Facebook make a couple key executive hires there and look at the space, but is that something you see happening in the very near future? And if so, how do you think Orbs fits into that?
Yeah, so I think it's definitely something that is happening. I think every serious company already has an internal team looking into the technology. In the case that you mentioned, Facebook, it's not just few executive hires. They actually transitioned David Marcus, who was the head of Messenger, which is the most important asset of Facebook, to lead the blockchain initiative. If you look at financial institutions, they are all looking at how this technology can affect them and how they can utilize it, to be leaders in their space. So I think definitely every company today already has an internal team. Some are more advanced, some are less advanced. But I think in that sense that the process will be much faster than people think. But until we see mainstream application using blockchain technology behind the scene, that will still take time.
Cool. Well, is there anything you guys would like to add that we didn't touch on yet that you guys are excited about or interested in?
I think the announcement that we just had in Korea, a couple of announcements that we've had over the past 2 weeks about our partnership with GroundX, which is the blockchain subsidiary of Kakao, the biggest chat app and one that controls like 98% of the Korean market, as well as our newly announced technical cooperation with Terra, which is like the Amazon of the payment protocol behind T-Moon, which is like the Amazon of Korea. And I think these, when you're looking at the United States, and this is regards to your questions about the big enterprise coming in, we see that at a much faster pace. They're coming in Asia, and Asia's, especially Korea, really leading the way. And because Orbs is there and working with the top players there, I think it's a game changer for us.
Yeah, and from my side, I think is that today, the ecosystem is really talking a lot in buzzwords, and as Danny mentioned in the beginning, 100,000 transactions a second, and so on. But when you actually speak with production grade real companies, the first issues they're facing is not transaction throughput. It's actually the whole compliance and legal and product decision regarding fees and user experience. And I think Orbs is really leading in that sense. And the more people will dive into the materials that we're releasing, and we are going to step up as we go forward and come closer to distributing the tokens and launching the network, I think that would get people excited. And really the strength of a blockchain project is the strength of the ecosystem and community around it. So we invite everybody to read and educate and engage. And I think that will add a lot of value to Orbs and the ecosystem as a whole.
Well, it was great having you guys on, and yeah, I'm looking forward to following your progress and watching this space blow up.
Thank you for having us. We would love to
Thank you.
Be on the show again.
Great. Have a good one, guys. The views and opinions expressed on this show are only those of its hosts and guests, and sometimes of no one at all. The CCN podcast was produced by Rockwood Audio and hosted by ccn.com. To find out more about CCN and the podcast, check us out at ccn.com. You can also follow us on Twitter at CryptoCoinsNews. If you enjoyed the show, please be sure to rate and subscribe.